Okay, the second step that we will perform is to identify and research anomalies that are found in the sales, cost of sales, and expense section of the general ledger. So we're dealing now with the net income or earnings. There's always a chance that we might have missed a mistake in the assets and liability section, or that the mistake doesn't really apply to the asset and liability section, it's someplace else. And so that's why we pull into the second section. Now the sales, cost of sales, and expenses are the earnings portion and can be researched by using historical comparisons. Now these are very easy to do in the world of computers today. In fact, in most cases, you can prepare a report like this that's called a monthly comparative just at the push of a button. Most software systems, most accounting software systems that I have seen provide this as a canned report, meaning it's just on a list, you push the button, it's there. One software program that I am very familiar with that doesn't do this automatically is QuickBooks, okay? It is not a canned report. However, it is very easy to customize, okay? And we can show you how to do that very quickly. You can build it. But it's simply a comparative report that lists each of the sales, cost, and expense accounts by month so that you can look at how one month compares to another, okay? Now, what I would do if I were running through this second step with this company in the month of April is I would simply look across each line. What's an anomaly? An anomaly is something different from the norm, right? Something significantly different. Do we have an anomaly in sales in the month of April? Yeah, we do. Now, sales were increasing each month. We were by about $1,000, and all of a sudden it jumped in April. Does that mean that the sales in April are wrong? No. It simply means that once we've identified an anomaly, which we have here, we're going to research it to make sure it's not wrong. Now, how would we research that $20,000 to ensure it's not wrong? Where would we look? Where would we look? Look at the sales journal, right? And we would look for why is it $20,000 in the month of April and it was less on the previous month. What could have caused it? Could we have had more sales? Yes. And we just look at the sales journal and see, did we have more lines? Now, what I like to do whenever I'm going through the second process is to have a pad of paper next to me, and I like to write notes along the way. And the reason why is because I might very well be asked by the owner or my boss, if I were an employee, why? Okay? And I want to look like I know what I'm talking about. I don't want to say, well, because the numbers are higher. I don't want to use that as a reason, okay? I want to tell him why the numbers are higher. So I'm going to look back, and if I see that there is 50% more sales, just more sales invoices in April, that means my sales staff or the sales staff in the store was 50% busier, okay? Now that's different than if I were to look back there and it was about the same number of sales, but then I look at this one sale and it was $6,000 to the Olsons, okay? And all the other sales were hundreds of dollars, but this one sale to the Olsons was $6,000. I'm going to write on that little pad of paper, the Olson sale, $6,000. Why am I going to do that? So that when they ask, why is it higher, I can say, oh, the Olsons. And they'll look back at me and they'll say, gee, he knows what he's talking about, okay? Plus, I'll understand the business a little bit better, okay? What else could it have been? Could it have been we had the same number of sales invoices, but each sale was higher? Maybe because it's a seasonal business. And if it's a seasonal business, April, we might charge more than we would back in January, February, March. So we did the same amount of work, but at a higher price. Is that important to note? Sure. All those things are different things that we will note, and we're going to store them on this pad of paper or back here to remember to be able to understand this business better. It's not unusual for you to get to know the business better than the owner does after a while, okay? So let's look at the next one. Is cost of sales an anomaly? it's not, but I know why there's some problems here. Why did it cause you some concern?
It's higher. One costs more. It's not enough higher.
Very good. You say it's not enough higher. Why do you say that?
Well, just in comparison, you can tell that the percentage kind of stayed the same until April, and then it was a lower percentage of cost of sales.
Excellent. You would expect that if sales increase by almost 50%, cost of sales should almost increase by about the same rate. Now, that could be wrong. I mean, that could be a wrong assumption. If that was an increase in labor, in service sales and not parts sales, then that may be right. But it would certainly raise an eyebrow. Now, it would be even more sure to know it's wrong if you knew that I calculated the cost of sales as a percentage of sales, okay? Now, if I look at this and say, hey, something's wrong here, and I look back on my notes and find out that, oh, when I was calculating my cost of sales, I wrote that $9,200 down to look like $7,200. So when I made the entry, I made it for $7,200. Oh, that was stupid, right? And so what do? I fix it. When do I fix it? Before anybody else sees it, right? Okay? Before I forget. And what's the entry going to look like? Okay, the entry was for $7,200. It should be $9,200. So what's the entry going to look like? What am I going to debit? What am I going to credit?
You're going to debit your cost of sale another $2,000.
Debit the cost of sales an additional $2,000. And what am I going to credit? Inventory, $2,000. Because my original entry was a debit to cost and a credit inventory for $7,200. It should have been $9,200. Now, in the case of some softwares, all we do is we go back in and we just change the number, okay? Accountants don't like that so much because they like to have a trail, but certainly when we're doing the books for a business owner, we're looking at efficiency, aren't we? Okay? So we go back in and change it. And when do you want... you want to do this now before anybody else has a chance to catch it, right? Isn't that great when you're doing an internal audit? You're catching all your own mistakes, and then when you turn it over to them, they never know you've ever made an error. They don't realize you've ever made an error. They think you're perfect. Okay, so we go through this audit. Okay, well, once we do that, now if we were to present this report, what would be the new gross profit? $10,800, right? Because now our cost is $9,200. Does that look a little bit better? It does, okay? Advertising expense, is that an anomaly? Certainly is, okay? So where do we check? How do we research it? We've identified it, now we need to research it. Which journal? Cash disbursements journal or purchases journal, but cash disbursements journal most likely, right? Okay. And so what we're going to do is go back in and look at what caused it to be $3,000 instead of $1,000. So we look at the cash disbursements journal for the previous 3 months, and it looks like we paid our advertising company $1,000 each month, and all of a sudden in April, we paid them $3,000. Okay. So we can now note down on our little pad of paper that advertising increased $2,000, right? Is that okay? Are we done? No. Why not? Excellent. That's where the bookkeeper becomes the accountant. Why did we go up $2,000? So you go back to the invoice. You look at it. Why did they charge us 3 times more? And you find out, oh, we did some television advertising, which we don't normally do. Okay? So we write down, due to television advertising. Are we done? What would be the next question? The next logical question would be, did it work? Right? Was it worth it? So what can we do? Look at sales. Was it worth it? Possibly. Okay, now we don't have all the information, but certainly it appears our gross profit went up by $3,600 because this would have been $10,800. So it went up by $3,600 for a cost of only $2,000 additional in advertising. It appears it might have worked. And also one thing about advertising is there's always residuals, okay? Which means that the advertising in 1 month might actually result in more sales in future months just simply because of the name recognition, okay? So Yeah, I would say that right now it appears it worked. How about depreciation expense? Is that an anomaly? Obviously not. You know, depreciation isn't going to change much. Office supplies expense, is that probably not? Office supplies, yeah, they bounce around a little bit. It just depends upon how often you go to the office supply store in a month. 1 month you're going to bone up on staples, and the next month you're not, you know. So it's payroll expense. Is that an anomaly? It's kind of marginal, isn't it? Could we justify the additional $500? So if we're in a hurry, we might say, yeah, that's all right. That's close enough. If we had extra time, maybe we'd spend time, make sure that that 500 is right. Let's imagine that we say that's all right, okay? How about rent expense? Why do we say that? I mean, the previous account, we said that 500 is marginal. Now it's $500. Pretty obvious there's an error in there unless the landlord called us and said, hey, listen, take the next month off, right?
Or if you move.
Well, that could be. I don't know. Anyway, it's unlikely to happen. So, yeah, that would raise an eyebrow. And so we look at that. How are we going to look at it? We're going to look where? Cash disbursements journal. We're going to find out why didn't we pay it. Could we find out that we put it in the wrong column? Could we find out that we put it in the payroll expense column? Yeah. Would that be a reason to correct it? So what entry would that be?
Credit payroll expense and debit rent expense.
Credit payroll expense, debit rent expense, then $500. Let's change the scenario. Let's imagine that we find the check in May 3rd. They just forgot to write it in April. You think that ever happens? But we're looking forward, and sure enough, May 3rd, there's a check for $500 to the landlord. Okay, so are we okay now? Why not?
You have to match the expenses with the income.
We have to match the expenses with the income. And so, okay, what do we do? Then if that means that, I mean, the landlord's happy, what entry do we need to make?
Debit rent expense.
Debit rent expense? Very good. Credit accounts payable. Did everyone catch that? Why? Because when one account's wrong, two accounts are wrong, right? Rent expense, was that wrong? Did we incur the rent in the month of April? So we know that. So that means there's got to be another account's wrong. It's accounts payable. Why is accounts payable wrong?
Because the check wasn't issued until the next month.
And as of April 30th, did we still owe $500? So our liabilities were understated until we made that correction. Now accounts payable is even more accurate than it was before. Okay? Then May 3rd, we're going to process that check through, right? On May 3rd. And we're going to credit the bank, and what are we going to debit? Accounts payable. We're not going to debit rent expense again, are we? Okay? Because we've already debited it for that particular month. Okay? Miscellaneous or utilities expense. Is that an anomaly? No. Okay, so you could get the process. Now, when we get down here, we're going to find that rent expense was wrong. We found that cost of goods sold was wrong. We fixed it. Now we've got a much more correct, accurate number to rely on, don't we? So we go ahead and tear up all the reports we've done so far, all the things that show that we do make errors from time to time, you know, and we print out new reports that we can believe and justify, okay?